If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. And we're back in terms of volatility. Stock market back down towards the low end of the range here this morning. By the way, I added a few moderators. Like, check out the moderator tag there on Trade Like a Tiger. We're going to be adding a couple people. I just sent a message to producer to hopefully just keep the live stream chat. We have we've started streaming to a bunch of new platforms like Twitch and Kick.com. We don't have a big audience over there yet, but hey, if it grows over time, if you want to be a moderator on that side of things, then watch us from Kick or Twitch. You can find us over there. I think it's on Twitch. It's A1 Trading _. But find us on Twitch and Kick if you want to support us. We're trying to, I don't know, break out to new platforms, broaden the show's reach, etc. Anyways, S&P 500 here, moving lower here into the morning session. Clearly, market still has plenty of jitters around what is going on in the Middle East. And actually, you could see, look at in the VIX. My goodness. VIX is screaming higher here, up 22% on the day. That tells you a lot about how this market is feeling. The market is feeling a little scared. Hey, Nick, yields are rising. Dollar stronger. This isn't the safe haven buying I expected. Let's take a look at yields. Yeah, interesting. Yields are actually moving higher. That is an interesting point, Lee. Thanks for sharing that. And also look at gold. Gold's lower. Silver's lower. This one can really be confusing at first glance. You say, how in the world is gold lower? And actually, I'll tell you this. I actually think that the catalyst here is bullish for gold. So to see a down 3% move tells me what may be taking place is simply raising cash. Sometimes we see that on the outbreak of major sell-offs. Gold and silver get sold heavy too as sources of liquidity for stock holdings. Remember, stocks in portfolios require margin. And so if a lot of margined traders start getting hit on the stock side of things all at once, they sell everything to raise cash, right? So that includes gold and silver. So if that's what we're having, if we're seeing some kind of margin call, a lot of times what that looks like is gold and silver snap down, but then they get bought pretty quickly. Strait of Hormuz on lock. Yeah, we've got definitely profit taking in case of a massive crash. I mean, I think that's actually how it works. Yep, Vampire Doggo has got it. Gold has historically fallen in the beginning stages of large economic events before rising. Cool to see it happening again. There we go. Look at this. I'm telling you what, man, this community is different than your average, day trading stream. That's for sure. A lot of you guys knew what I was going to say there before I even said it. That's pretty awesome. It sounds counterintuitive, but during COVID, guess what gold did? It went down first, right? That sounds really counterintuitive. You're like, what? During COVID, gold went down? Yep. You don't believe me? Take a look at it yourself. I mean, pull up the charts. Go back to 2020. What was it? February and March and April of yeah, look, here's gold onset of the COVID pandemic, arguably one of the scariest things to have happened in recent history, was a global pandemic getting announced, and gold went down. Why? Is it because people weren't scared? No, not at all. People were really scared. And they said, we need to raise cash to essentially cover a widening margin call. When the VIX shoots up like this, what it causes is it causes a lot of portfolio managers to have to reel it in, meaning cover some of their leveraged bets on the stock market, on the crypto market, etc. And so what do? They close things out to raise cash, including gold. Now, what you'll see is that for those people who are patient, these are actually, historically speaking, not financial advice, great buying opportunities, right? So if you get a flush to the downside on gold, to me, that's actually a buying opportunity, not financial advice. Like I said, I could be dead wrong about that. Gold could go to zero. So don't listen to what I'm saying. I'm just telling you, historically speaking, that is kind of how that goes. When you have global events where you see everybody kind of selling everything, gold gets mixed in with everything and then gets bought later. So we'll see. We got some, I can't delete this comment either, James, the spam comment on kick.com. That's totally a bot. Maybe, I guess I have to do that on kick.com. We did, like I said, we are new to streaming on kick.com. If you want to check it out over there, that would be awesome. I'm pulling up the stream. It's just so I can get rid of this. Oh, where's the spammy? Okay, accept it. I'm just going to get rid of this spammy comment. Nobody send any messages to that spammer. Anyways, I guess I should block that person, but I gotta keep rolling here. We got a lot of stuff to cover. Okay, so Nasdaq's down 2%, S&P's down 1.7%, Dow Jones down 1.8%, Russell is down 2.4%. You know what the big loser is today? Japan. Why? Because Japan gets a ton of oil from this part of the world that is heavily impacted by all this stuff. So when we look at Japan, do we want to buy the Japanese stock market here? Do we want to buy the Nikkei? For me, I'm a little cautious on stock indices at this time. I do still have that oil trade. So I have to tell you guys, I had the most annoying thing in the world happen to me on oil. And I'm not even kidding. I had to take a walk. I was so annoyed by this. So intraday yesterday, US oil crude futures, this is what they look like on the 15-minute chart, okay? Watch this. USO, which is what I was trading, had this annoying AF blip to the downside. And it took me out of the trade that I was previously in. I trailed it. So this is, again, full transparency. This annoyed the heck out of me because look at this. So I bought US oil and I got wicked out. But that move did not happen on crude oil and on the CFDs that I track. I don't know exactly why that took place on USO. I've not seen that happen before. And I wonder if it has something to do with the underlying contracts, the futures contracts that are traded by the ETF, you know, the fund managers. I don't know how that took place. It annoyed the heck out of me because I was like, what the heck? I got kicked out of this trade. And within 1 minute, it was back up. So I like, you know, easily lost like $4,000 of profits. Fortunately, I was able to rejoin this on my own account last night in the after hour session. Oil dipped back down and I did re-enter this. And I shared all this inside of our Discord, but I would be lying if, you know, I've been trading for 10 years and stuff like that, which I remember happened to me all the time when I was new to trading. Like you'd have these little mistakes, but that downright made me annoyed because I was like, are you kidding me? I got wicked out and it was only there for half a second. It was almost like a blip of like, I don't know. I still don't know what exactly that was. If somebody knows what happened with USO, why that took place yesterday. Yeah, you tell me because my gosh, I was downright annoyed. But Fortunately, and oh my gosh, you guys might not have seen me today if I didn't get the chance to re-enter that trade. I'd be so pissed. just being real with you, because look what oil did after, right? If I walked into stream today, did not get the chance to re-enter my trade, and then we had this, I don't care how long you've been trading. I don't care if you trade like a robot or be emotionless in your trading. That would downright piss me off. And it didn't, because I was able to get back into the trade. Would I have tilted and, done something stupid? No, I just probably would have literally been like, we're not going to talk about oil today. Because I was just like, that would have been just so annoying. If I got kicked out of the trade from some weird blip and then didn't get the chance to re-enter. Fortunately, I did get the chance to re-enter, but full transparency, that would have put me on extreme tilt. And I rarely ever, that's the sort of thing though. Like, I can take a loss. If I take a loss on a trade, whatever, hey, the trade didn't work out. But if I get like wicked out of something and it goes back, I don't care how long you've been doing this. Everyone has something that will get them triggered. That's mine. Is when you get kicked out of the trade and then it goes in your favor. But like, again, I want to reiterate that if that had happened, and it's going to happen, like stuff like that's just part of the game in trading. If it does happen though, what's important is that you don't actually change your actions. Like, I can tell you, I'd be really annoyed, but I'm not going to go like do something stupid about it, right? I'm not going to like tilt and over leverage. I literally just had the chance, fortunately in this case, to re-enter the position with the same size as we retested this intraday in the after hours session. And then, of course, everything took place here overnight. And I say this because, again, I have long stock positions that I'm essentially hedging with this oil trade. I am up on the day, I believe, by a very small margin because I own stocks in my portfolio, but I've also been riding this oil trade, which, by the way, 9.25% here. We are ripping higher. What broker? Very fishy? No, it's actually not fishy. There's just something I don't know, because I can tell you what, USO is heavily traded, and it's not on a brokerage. It's on the US stock exchange. So yeah, just annoying that it happened. I don't know exactly what took place there, but with so much volatility and so much kind of freaky price action recently, it really did annoy me. Dollar index pushing higher here. We look at this. Dollar index is just straight mooning right now. We are at resistance. Check this out. Let's see. We broke clean through this spot, shot to the upside. Definitely feeling like I wish I had kept my pound dollar shorts, but of course I have a system, so I'm looking for re-entry opportunities on the pound dollar. Again, I took a really nice profit overall, and we will see how things go from there. On the dollar index itself, where are we going next on this one? Again, I think that there is a double-edged sword here in terms, or I should say, just a battle axe bull case right now. Here's why. If I take a look at the asset scorecard here, at least recently, we've had some strong U.S. data. Actually, what happened to our score here? What changed? I guess seasonality took away some score. But just from a fundamentals perspective, let's just focus on fundamentals for a moment. Economic growth getting a bullish rating. Manufacturing PMIs yesterday came in solid. We get services PMIs, I believe that's Thursday. Consumer confidence came in strong. Inflation has been a little hotter than expected. And with oil prices on the rise, that is, number one, inflationary to an extent. If that remains elevated, that could keep the Fed on hold for a little while. But number two, and arguably more important, is that this whole geopolitical stuff is the other side of this equation, which is very risk off. And so dollar is catching a bid in regards to that. This was a big swing in score here on a 1/1 or 1 day basis. So I'll continue to monitor that. We did see some institutional selling, which is kind of intriguing to me. You saw some profit taking in the dollar index. So we'll see. Taking a look at the top setups page here. Let's see if we have anything sticking out to us here today in terms of possible trade ideas. Let's see. I'm going to just filter out neutral readings. Okay, so I'm still long the oil trade. That's still top of mind, most obvious trade for me. Copper is another one I just want to look at. Some yen pairs might be on the radar today. Aussie yen, dollar yen. Still getting that euro dollar and pound dollar bearish thesis here on EdgeFinder. Pound is getting a weak reading as well at an index level. So let's take a look at some of those charts here really quick. So again, I mentioned long oil. What do I want to do with this one? So this is our next spot, right? So we actually cleared what everybody watched. And I have to issue a bit of a PSA on this. I had some people kind of annoyed with me yesterday because I pointed out like it's going to take a lot for oil to get through the highs and that there was probably some sell the news events that took place yesterday. I still stand by that, but let me maybe clarify a little bit better what I meant by that. So if I look at this on US oil, yesterday, what I said is that it will take some sort of escalation, some sort of significant increase in uncertainty for oil to break above 75 in short order. And although I didn't think it was necessarily the base case of what would happen, neither did the market, otherwise it would have already been there. It did, right? We saw more escalation. We saw more intensity. And so what I said yesterday, and I want to clarify this, is not that I think everything from here is all good and that we're going to have a ceasefire by end of week. Otherwise, I would have actually been short biased. I am not. I'm literally long oil right now. What I said is that the mistake many traders made was thinking that, okay, because of what happened on the weekend, when we gap higher, we're going to continue straight up. The lesson I was trying to share with people yesterday was not oil can't go higher from here. It was oil gapped higher, and many traders thought they could simply buy the gap, thinking it would be easy money to continue higher. It wasn't, because again, the market priced it on that gap open. Then things sort of seemed like, okay, maybe the worst is behind us, and nope, market is now breaking higher. With oil up 9.7% on the day, that is absolutely, a sign and evidence of, okay, we got some chaos going on. You don't even need to look at the news to know that. Market is saying if oil's going to 78 bucks, what is it at? Almost $78 a barrel. If you're ripping through the highs here, what that's telling you is geopolitically, we may have more than we previously had even expected. The market priced in over the weekend, hey, we've got big stuff happening. It's going crazy. It's going down in the Middle East. And then the market kind of sold, bought the rumor on Friday, Thursday, and Wednesday, sold the news, and then more news comes out, pushing oil to fresh highs. So we never know with certainty where oil is going to go next. I cannot tell you with any amount of certainty oil is going to XYZ, right? I can't do that. I'm a trend trader. I'm a trend follower. I look at the macro. For me, the easiest trade right now is US oil longs on dips, right? Waiting for calculated pullbacks. If you bought the open, that's what I was trying to be like, hey, careful with that. Just buying the gap up, thinking, it's going to be easy money. That's where people get in trouble. I also don't think this is easy money. To go long oil right now, in my opinion, is not easy money. There's never easy money, but chasing after we have the move is what gets a lot of traders in trouble. Because look, if you had chased this, a lot of traders probably got stopped out real hard, real quick on this. Whereas if you were patient, maybe you got a chance to buy the dip, and now we are pushing higher. So what I'm probably going to do here today is I'm going to trail my stop loss. I'm going to move this thing further in. I don't know how far this wants to go. Geopolitically, things are blowing up in our face right now. So for now, path of least resistance is higher, going with that trend. But we know how these things can jump around. You can have a very quick, okay, we're gonna negotiate again, and oil can drop like that real quick. So yeah, we'll see. With that said, Nasdaq down 2%, S&P 500. I said this yesterday, and I'll kind of say it again. Generally speaking, when you get these shocker days, you get a buy the dip that steps in New York session. We'll see if it happens again. Yesterday, I said there was a 55% chance that we go higher from when we were streaming, and we did go higher yesterday. So we'll see if it repeats. I'm probably going to, just full transparency, on my own account, I'm going to look to buy some stocks, sell some premium on some stocks that I like. With the VIX up at 21, or I'm sorry, 26 now, I think you have decent premium selling opportunity. But we'll keep watching it. If we take a look at dollar index again, testing resistance, let's see if we can break through this. If you're watching gold and silver, gold here sitting around $5,075 an ounce. There's a pretty big level of support, at least for now. It seems like buyers have tried to hold this area once already, down to a 15-minute timeline. You can see kind of that solid candle here printing. If you are a trader, short-term trader, watch for the break of that. If that fails, if we take out those lows very well, we go back to the 4-hour, then you're sort of back into no man's land. This is definitely a clear level of support. If that breaks, day traders could take it down. For me personally, though, base case here, I'm kind of neutral on gold myself, but from a technical basis, that's a pretty critical level of support to watch. We'll see. Gold is getting a +4 reading on EdgeFinder. Fundamentals have been not as good. We had strong manufacturing PMIs. That's really strong for the dollar. I actually think the risk-off play right now is sort of dollar longs. Dollar longs have exposure to oil. That's kind of how I'm playing it. I know obviously gold is, the ultimate kind of protection. But you can see in the short run, we could understand this is if you know gold very well from a macro perspective, you understand that we could see this thing escalate. And in the meantime, gold go down. Why? I mentioned this earlier, but I'll do a quick recap. Gold oftentimes gets sold with the rest of assets in times where people need to raise cash to cover their margin. Let me explain. If you are a portfolio manager, if you're a hedge fund, and you have leverage, you have positions on that carry leverage. When the VIX explodes like this and movement in the market is very, very rapid, traders, investors, portfolio managers, etc., oftentimes need to raise cash to cover that potential margin call. What do people do to raise cash? They sell assets, stocks, and gold fall into that category. So people can often sell stocks, sell gold to raise cash in the short run. If we're speaking historically wise, if you're going to continue to see escalation uncertainty, that could be a short-term push lower in precious metals, but that uncertainty still prevails, and typically that dip gets bought in precious metals first and foremost. Like in COVID, we talked about this earlier in the stream. During COVID, gold and silver got smashed down hard alongside stocks, but recovered even faster than stocks did. You got to know your history. This stuff is really important. So understand, if you think I'm going to buy gold because things are scary right now, that theory is actually perfectly fine. But understand that in the short run, you could get a flush down in gold as people raise cash. Not you and I people. I'm talking about portfolio managers, big players that have, billions of dollars under management that need to raise cash, maybe because they have, their crypto portion of their portfolio is blowing out. Maybe their tech stock portfolio is blowing out. Something requires cash to be raised, right? When you see selling, this is why there's an old expression that that correlations go to 1 a lot of times in market crashes. I'm not saying this is a market crash, but if we do continue to see this to roll over, to sell off hard, they say correlations go to 1 because all charts start looking the same if there is truly a grab for raising cash and to get out of markets globally. Not just stocks, not just tech stocks, not just value stocks, not just gold, not just silver, but everything at once. That's where you see that, raising cash. Can you look at the Nikkei? Yeah, so I talked about the Nikkei a little bit earlier. So 5.7% down day is a huge move, and you have a major level of support here. This is actually putting us, I think it's at a 10% discount. Yeah, look at that, 10% off here on the Nikkei. Of course, that's following a monstrous upward trend. if you think this stuff, I'll say this, if you think this stuff's going to blow over, one of the biggest winners or biggest losers is probably the Nikkei and the Chinese stock market, because these places get a ton of their energy, their oil, from the Strait of Hormuz. That stuff goes out to Pakistan, India, China, Japan. So you'll notice that Chinese stocks are getting hit hard. Japanese stocks are getting hit hard. And Indian stocks are getting hit hard. Here's INDA. It's an ETF that tracks the Indian stock market. You can see this thing is getting hit hard as well, because if energy is disrupted for a few weeks or months, that significantly hurts their economy and potentially introduces inflationary pressures, not just to that region, but to the global situation. Okay. So you have a lot of stuff at play here. These are, I know that, it can sometimes be a snap reaction to say like, oh, buy this dip. But I think you do also have to understand why this could spill into other problems, right? The key one being supply chains similar to COVID, which you can see, you go back and look at a chart during COVID, how quickly markets can flush lower when you have supply chain disruptions. A lot of shipping goes through that region, a lot of oil, right, goes through that region. So for now, oil remaining bid like this tells me, okay, market is slowly pricing out the idea of a very quick, done and dusted type of event. And maybe this is a little bit more drawn out. So we'll see. Very interesting stuff taking place. My personal opinion, I'll continue to say it. I do think that there are some viable dips in markets for the longer term. From a short-term trading perspective, this poses significant risk to inflation, and the path of least resistance for short-term trades, in my view, remains oil longs on dips until proven otherwise. I am long oil. I'm long USO. I've got a decent runner here going, and my plan is to look to trail stops and just kind of catch this one as long as I can, right? So my next spot to trail stops, US market opens up in 1 minute. I'll be trailing my stop loss on USO. I'm going to probably move this up to 74 on, spot price. If we cannot hold this level, then I got to get out of there, right? Just take profits. I'm literally purely trading the momentum in combination with EdgeFinder reading being solid. This looks good. We have a fundamental score that's good. We have sentiment data that looks, good in the sense that COT data shows institutional accumulation. Technicals obviously screaming higher here on a 4-hour and daily chart perspective. So what are you looking right now? Oil is the focus. For me, oil is the focus. If I'm talking about trades, if I'm talking about short-term stuff, oil dips, oil rips. You can look at 37 charts if you want, but sometimes you just kind of have to focus on one. And for me right now, oil is the play. Now, if you're asking me, hey, are you doing anything longer term on this? The answer is yes. There's two things that I'm doing. Number one, I'll probably be selling some premium. Now, if you don't know what that means, I'm selling cash secured puts on individual stocks that I like. I don't have time to go through all those stocks at this time because we've got to throw the show over, about to end this segment and go to our next show host. But also, from a longer term perspective, I actually do like, I'll say this, I do like the idea of potentially buying some INDA. This is India's ETF, not for a short-term trade, but for a longer-term hold. A lot of growth in that region. I think that's something that I may dip my feet into. And maybe I get some better prices a week or two from now. So I'm going to probably buy a little ETFs of stuff that I like for the long term. I do think this is a long-term viable dip, but short-term, we could have some severe volatility in all directions. So from a trading perspective, short-term, dollar bullish, US oil bullish. From a long-term perspective, looking to buy the dips on some stocks and ETFs that I like for the longer term. Guys, up next, we've got Alan Perez taking over the stream. Don't go anywhere. This guy, he knows his fundamentals. In fact, he does a lot of our writing for the Telegram channel that we'll also drop a link to if you're interested. Actually, real quick plug on this. Join the Telegram. This stuff is moving so fast. If you can't sit on a live stream or a video all day long and just want to get bite-sized updates on things that matter, as well as macro technical setups, join us in the Telegram. It is free to join. Here is the link. You can also scan the QR code that is below my camera if that is easier for you. Join us in there for updates. Up next, you've got Alan Perez from our team here sharing some of his trade ideas and updates on this macro and technical situation. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Don't go anywhere because there's actually lots of opportunity, lots of movement, lots of potential trade setups going on in the market today. Just like Nick, I made a silly mistake. However, I was not able to fix mine just yet. So I was in this euro dollar position and I made a silly mistake of not taking off my take profit level and moving it lower because I said I was going to go ahead and trail stops. So I got taken out of euro dollar here for a win of 256 pips there. But again, there's lots of things happening with the markets. I made a mistake yesterday. I made a call out and I basically said something new would need to happen for oil to continue moving higher past these recent highs. And we did get some more strikes in some very critical oil areas or refineries that went ahead and added a further risk premium to oil. But now you have a very interesting dynamic. I'll talk about gold too, because I think that is a good opportunity potentially. But nonetheless, you have a lot of these markets lining up at these very, very key technical levels. And I think at the moment you have an opportunity or a situation where you're going to have a little bit of a fight between the bulls and the bears, right? Are people going to be fading this move ultimately? Or is the risk premium going to override that and continue this thing higher? So that's essentially what I'm looking at. Just going down the list of all these asset classes, right? We'll look at the oil chart here. I'll go back to that here on the 4-hour chart. This is what could be a level of resistance. Now, there's a lot of momentum behind it. So feel free to just listen to what I'm going to say, and then I'm going to give you a summary at the very end. But oil here is at the $76 handle here at this what could be level of resistance. The other big moving asset at the moment is the dollar index, and that is as well at the $99.5 handle, another level of what could be resistance. So you have this opportunity where if people are looking to fade this move, this is their other chance to do so. So what that would look like. Just looking at it, if you want to short the dollar, cool, that's an option. But let's go down the list with all these asset classes because they are all at very critical levels. S&P 500 at this level of support. If you want to see a repeat of what happened yesterday, remember we had a drop in the S&P 500 when markets opened on Sunday night, and then you had a rebound. Now we are at that same level again. Nasdaq, same thing as well. You're pretty much close to that next level of support along that 200-day moving average. Dollar index, of course, is at the $99 handle. Aussie dollar really, really close to that support level. Remember, this was that initial breakout as we were betting on the RBA to continue hiking the rates and the US to continue cutting rates. So this is a very strong level of support for the Aussie dollar. Euro dollar clearly at this level of support here. I got taken out. Pound dollar as well at this level of support. Kiwi dollar right here, pretty close to this level of support at the 200-day moving average. You have dollar yen at this level of resistance. You have dollar Swiss at this level of resistance. The list goes down and down and down. Dollar CAD is a tricky one here. I did take my profits there prematurely. I wasn't going to let it ride just because we had this continued pop on oil. For those that don't know, the Canadian dollar is correlated to oil in a sense. So I took my profits there. I'm going to actually delete this here. But again, all of these asset classes are lining up at a chance to go ahead and fade it. Gold as well. Let's look at gold here. Gold is down 3.9%. It was down almost 4% earlier. The reason being, right, because it's pretty confusing because gold is usually a safe haven, right? So why is gold going down? Well, it seems like the dollar safe haven bid is overriding that. Also, too, you have this inflationary worries, and gold does not like the higher yielding dollar, right? Especially with inflation. So that is why you see gold kind of chugging down here. But again, very strong technical level of support here. Remember, this was the range that we were playing in, the playground between the 5,100 and the $47 an ounce on gold. And now you're back at that 5,100. So what am I looking to do here? Well, I'm going to be slightly patient, but I am looking to become very active very soon. So with the euro dollar here, well, let's go with a dollar, right? That's what's pretty much driving the market alongside oil. If you see the dollar index continue chugging higher, breaking out of this $99 handle with some momentum, then I'm just gonna, go ahead and wait for a break and retest on the euro dollar. That's the best one that I would go for if I'm going to go long dollar, right? Unless you're gonna go along the actual dollar via like an ETF or something like that, or the futures, sure. But if you're trading forex, if you're going to go long the dollar, I would say go with the euro dollar. Why? The euro dollar is specifically vulnerable at the moment. They were just coming out of stagnation. You have this inflation worry that could come with this, global inflation from oil, but then you also have some growth concerns out of the EU that makes the euro dollar very, very unattractive. So if I'm going to continue that trade, it would be via the euro dollar. Now, if I'm looking to fade this move, right? Because if you get a little bit of a tracement in the dollar index, what would that look like? I would go ahead and suggest, if you're trading forex, go to your currency index, the currency strength right here, this chart, and you can see which one is on top. So in orange, you see the US dollar, which is in orange. Then you see the next best asset class, right? The next strongest asset on the day, which is the Canadian dollar. But remember, Canadian dollar is correlated to oil. So if you're looking to fade the oil move, that would actually hurt the Canadian dollar. So dollar CAD would be kind of, like wonky. So you don't want to go with that. So you go to the next best option, and that would be dollar yen. You can see that dollar yen is actually picking up a little bit here towards towards the now. As you can see, the price is kind of diverging between the purple and the blue here. That's dollar yen creeping up right there. Why do I like dollar yen if I'm looking to fade the move? A couple reasons. Let's go to the daily time frame here to make it a little bit easier to see. But you can see that dollar yen is creeping up right back at this level of could be resistance. And if we remember just a couple weeks ago, this is intervention territory for the Bank of Japan. And I actually remember seeing some comments out of Tokyo that they are very much aware of what's going on in the world, but they're still looking to achieve their objective of raising interest rates. Now think about it, especially if you have global inflation ticking up, then that could be a real reality for the yen. So I think that this level right here, as you get elevated in the dollar yen, will still be defended. So that would be one of the areas that I'm looking to fade this move if I get an opportunity. Now, I'm not going to blindly catch a knife because you definitely don't want to do that. What you would rather like to do is wait for, if you go to a lower time frame like a 1 hour or 4 hour here, and look for an actual V-shaped recovery, right? But until then, I am sitting out on the sidelines here and waiting for something to happen. Again, in summary, if you see the dollar index break above that 99.5 handle, then you have some continuation. I would go short euro dollar. If you see this thing start rejecting here, especially if you see dollar yen kind of creep up even more elevated, the higher it gets, the more riskier it gets for the dollar yen as far as intervention. So I will wait for a V-shaped recovery on that one and trade it lower. Now, how much lower do I go? That's another question, right? That's how much we have to consider what's going on in the world. If this geopolitical risk is still very, very prevalent, then you want to have a short time horizon. If this thing is coming to a complete end, then you can kind of, lengthen your time horizon. But until then, that's pretty much the route I would go as far as fading the move. Gold here is an interesting one, guys. I know there's a lot of gold traders out there. You do have this level of support that could be holding, right? Remember, gold is still a safe haven, but it does not like global inflation, especially with the US. So what I would do at the moment, we can't act on it, and I'll tell you why right now. If you look at gold on the asset scorecard here on the EdgeFinder, it is a neutral reading. So gold is a no-go for me at the moment. For anyone out there, I would definitely reference your EdgeFinder in times like this because things are moving really, really fast. And we still have some economic data. We still have an economic calendar, right? Which can improve or even worsen the underlying conditions. So I'm looking at gold here, top setups page here. Let's go ahead and look at that. And for those that, I don't know if there's a sale at the moment or anything, but definitely cop yourself an EdgeFinder. This would be the perfect time to do so, just so you're not trading blindly, right? You have your sentiment data that you can use, especially right now, your COT data, all that good stuff. So let's go ahead and look at here. We're going to go to the major currencies only just to kind of see what's going on here. So dollar yen is actually getting a bullish reading. You do have dollar Swiss, dollar CAD getting a neutral reading. If we go to the currencies only, you can see, oh my goodness, you can see the Canadian dollars bearish, pounds bearish, Swiss francs bearish, yen is borderline bearish. So if I see that yen become a little bit bearish, or less bearish and more into the bullish camp, then I will definitely be interested in fading it. Again, I need the price action to go ahead and lead me on this one. In times like this, I remember Ivan said this best yesterday. Price action will kind of help you lead the way, right? As far as reversals and bounces and all that good stuff. But look at this, guys. Gold is dropping like a rock here continuously, less than that $51 handle. So let's see. Look at Aussie Swiss. I got you, man. Let's look at Aussie Swiss here. Aussie Swiss. Let's go ahead and see that. Oh, wow. Well, it's kind of fading back off here. I did remember seeing this on the top of the list here on the top setups. Let's go to miners only. Aussie Swiss was a very bullish reading, +9, and it's looking like it's fading off. So what I would do with Aussie Swiss here, if I'm trading this from a technical perspective, along with that EdgeFinder bullish reading, I would wait for a pullback back into this 54.40, 54.600 level. That's what I would look for the Aussie Swiss. Any other trade setups that you guys want me to look at, guys? I know gold is a big one. Oil. Did oil pop out of that? No, not yet. Kind of just rejecting that resistance level there with oil. What I think about CAD yen? CAD yen, let's look at the chart here. I'm assuming right now that the CAD is somewhat strong. Yeah, look at that. CAD is strong here on this. The yen is somewhat weaker, but remember, as you get elevated with that yen, you do have that intervention risk. Tokyo did say that they're still looking to intervene if it's needed. And remember, a couple weeks ago, the Fed did assist them in doing a rate check, so that's very, very possible. Kiwi yen. All right, I got you. Kiwi yen. Let's look at Kiwi yen. Kiwi yen could be a good one. So Kiwi yen, very, very specific there, crypto meet. Kiwi yen, if you see a flip in sentiment, then this one will be a good buy. But remember, Kiwi dollar is a risk asset, so very, very tricky there. I would say any risk asset at the moment, you will kind of want to stay away from a little bit. So Kiwi yen, from a technical level, maybe you get to this 50-day moving average, and if sentiment changes, then that could be a good opportunity. But remember, you got to do your homework on that one and be mindful of the situation. If the risk sentiment is still risk off, then this thing can continue to fall lower. Any possible longs on pound dollar? I don't know, right? If I'm looking, like I said, if you're looking to fade the move, I don't think pound dollar is the way to go. Pound dollar or euro dollar, I would think dollar yen would be the better choice of the two if you're looking to fade this thing. Pound dollar has been dropping like a rock for many, many reasons here. I would say if this thing flops below that 32.5 and just continues lower, the next level of support is that 1.30500 level. But pound dollar, I wouldn't long it. If anything, I'll wait for a retracement to go ahead and short it. Maybe if we get back into these moving averages here, that 200-day moving average in yellow, that would be something that I will look for. In fact, let me measure this with a Fibonacci retracement level here. And see, yeah, so that 200-day moving average is right in between that 61.8 and that 50% retracement level. So you could ask the question, well, can I just go ahead and long this thing up until here and then short it after? I wouldn't do so, just because you have a real risk of this continuing lower. So I would just wait patiently here and wait for a pullback. Remember, pullbacks are the fast ones, right? So when you're trading and when you're in the trending market, it kind of grinds, pullbacks pretty fast, and then continues grinding there. So just be patient. You'll thank yourself later on that one. What happened to Aussie dollar? Aussie dollar is a risk currency, man. It's a risk currency, and it's also somewhat tied to gold. So big export of the Australian economy is gold. And that is why with gold down 5%, that's why you're seeing the Aussie dollar take a huge hit there. So that's kind of the reason behind the Aussie dollar. Marco, my friend, how are you?
Hello. Can you hear me?
Yes.
Sorry, I got lost in my trading view because my alerts were going off like crazy.
Okay.
How are you? Crazy market today, right?
Yeah, a continuation. I made a mistake. My mistake was that I did not remove my take profit because I remember I was going to trail stops on euro dollar. So I had my hard take profit at that 1.600 or 1.6100 to be correct. And I got taken out there. So this thing is continuing lower. But I'm actually quite thankful. It gives me a clean slate. Like if we're going to fade this move, it gives me the opportunity to be ready for that. Or if it's going to be a continuation play, then you just wait for like a break and retest and then continue that route. But and because of that, I took off my dollar CAD position as well, just because You know, as you know, Marco, the Canadian dollar is correlated to oil, so oil's doing good. The CAD dollar is actually not doing the best. I mean, dollar CAD's not doing the best, so I just took that off just because. But yeah, how about you? So you said you have some alerts going off. Is there something that you're looking to participate in?
Yeah, and before I go through that, I just want to mention we have a DNA funded giveaway today. So I'm gonna put the link to the giveaway form in the comments. You guys just need to fill it out, and then you'll get entered into a DNA funded giveaway. It is gonna be a 5K one phase account. And yeah, now let's get back to the charts.
Awesome. Yeah, go ahead and participate with that, guys.
Yep. Aussie dollar is my first alert that went off, and we hit the we're close to the 695 level, but I don't want to buy at this moment. So I don't think the EdgeFinder is even giving a bullish reading on the Aussie dollar. Yeah, it's a neutral reading. And with this massive explosion in the DXY, I'm really, really hesitant to get in on the Aussie dollar long. And with the massive flight to risk off, I'm not sure when it's going to be over. I don't see any news about the conflict dying down or kind of coming to a halt. So there doesn't seem to be a solution in sight, which means more risk off, in my opinion. Until we can see some sort of, let's say, talks being done and de-escalation, then fine, we can flip to risk on, but risk off at the moment. So I'm going to remove the Aussie dollar from the watch list, going to put it back here in my FX pairs. And I did have a sell limit on the euro dollar. It was on the 1.174 level, stop loss 1.186, but I'm most likely going to remove this sell limit because, I mean, if we retrace all the way back to that level, something is clearly wrong with my trade idea. The sell limit was set yesterday when we were pretty close to that level, but now we have just flown away from it. So time to find the new entry level. What's your take on euro dollar? Are you looking to re-enter any levels? I know you mentioned the possible break and retest.
Yeah, if you get a break and retest, I would be looking to participate again. Just if the case is still that this is still going on, then of course I'm looking to re-enter. If I just put a fib right now at the moment here,
Okay.
I like to trade like the 50-day and a 200-day moving average when it comes to just like plain old simple support, resistance, all that good stuff. At the moment, this 200-day moving average in yellow is at that 38.2% retracement. So if we get a pullback into that level, then I think it's still pretty viable that you can go ahead and trade your dollar short. To your point, Marco, if you start to see a deeper retracement there, then obviously something's wrong, right? Obviously, the narrative is significantly shifting, so I would stay away from that. So I would wait for either 38.2% retracement level on the euro dollar or a break and retest like you mentioned earlier as well. So that's kind of my idea for the euro dollar. For the Aussie dollar, looks like a very, very scary chart. However, I would be open to picking this up, you know, around the time if I can time it somewhat correctly, or even like just get a dollar cost average position going on the Aussie dollar, because you still have these underlying, like the RBA is looking to hike and the dollar's looking to ease, you know, assuming once this is all over with, right? So once this is all over with, that's going to pick up again. And so I think this is an opportunity where the deeper it goes, the better for you to go ahead and pick up some Aussie dollars. So I would take probably my first stab at that 6,900 level here, and then just even lower. I'll find the technical level below that as well. But I mean, it's really getting hit today. You have the dollar increasing, right? So that's why the Aussie dollar is getting hit. But then you also have gold, which is just falling here. So yeah, so I think we do have an opportunity to get a real discount finally, Marco. I know I've struggled getting into the Aussie dollar.
Yeah.
I don't know about you. So this, to me, this is like finally something's happening longer term, right? This is a longer term picture. I know the next rate cut is due for September, but maybe we can see the CME Fed watch through probabilities. If things die down, maybe they get shifted back up to July, and then you can kind of time that a little bit and say, okay, you know what, we can probably pick up some Aussie dollar more aggressively.
Okay. So would you be happy picking up an initial position at, let's say, the support level that you mentioned on the Aussie dollar, or would you wait for sort of a change in narrative? Would you wait for the conflict to die down a bit? Is it?
Yeah, it would take a lot of discretion because obviously right now, just knowing what I know now, I wouldn't just blindly pick it up, right? Because I
Mhm.
kind of know what's going on. But if you do kind of see us get deeper into this level, and you see like on the lower time frame, like a little bit of a V-shaped recovery, things like that, then I will pick it up. But that doesn't mean I'm going to pick up a bunch. I'm going to pick up a very,
Yeah.
very small size and see if that V-shaped recovery does start to roll out. And if it doesn't, then cool, I can just better my cost basis as it goes lower a little bit. And that's what I always say, guys. Like in this environment, lower lot size and wider stops is your friend. You can always add to a position if it's going with your direction, but it's so much harder to take off risk when you're bleeding and you have a big size initially. It's like psychologically, you don't want to do that. You turn a trade into an investment. I always say, like, once you start turning a trade into an investment, you know you're done. So
Mhm.
that's kind of my thought process with Aussie dollar.
And with the euro dollar, was that the 200 DMA that is now flowing on your chart? So James, if you can just put back Alan's chart on this 4 hour, the line, is that the 200 DMA?
This is the 200 daily EMA, yeah, right here in the
That's the
yellow.
daily EMA. Okay, cool.
Mhm.
Cool. Okay, so maybe look for a retest of the 200 EMA, which coincides with the 382 level, if I'm not mistaken.
Yes. So
Yeah,
right
that might be a
here,
good play.
this recent drop right here, that pretty much on the T there, that 38.2% retracement. Let me remove this thing right here. And I keep the 200-day EMA static, so no matter what chart, it's going to be right there, the 200-day. Right here, 38.2% retracement, and this yellow one is a 200-day. So it's pretty much tied up on there, right there.
Yeah, I may need to steal your trade idea for the Discord, because this seems really good. Again, I'm looking to enter, but my current sell limit is just too high. If the price goes back to my sell limit, it's not gonna work. But if we put the sell limit on this 382 level, I think it's a pretty good play, especially if we get one more leg down. And I do think we could get another leg down as this conflict drags on, because it's already Tuesday and there's no new news about it. So essentially, it could be a prolonged conflict, which means this initial move that happened will actually follow through, and we'll get even more of a sell-off on the euro dollar.
Yeah, for sure. Someone said in the comments, why'd you say a deep pullback on euro dollar isn't a good idea? Elvis, I would say if you get a very, very deep pullback, especially all the way up here, then most likely than not, you have some kind of a resolution, or you have something like the market is like Marco's point. Let's say this thing is prolonged, right? You have like another Middle Eastern war, like, you know, during the Bush area, and it's a prolonged thing. The market just accepts it. They price in what they need to price in, and then they move forward from there. So that's kind of why Marco said, and I agree with Marco. If you see this thing pull back all the way over here, then essentially like something shifted, right? Something dramatically has shifted. So you want to play the momentum game, and so these shallow pullbacks is the way to go about it. So the 38.2% retracement level, that's a good one for me.
Yep, absolutely. What's your take on gold? Gold is doing some pretty weird stuff because we're supposed to be in a massive risk-off environment, but gold is getting dropped like a rock. What's your take on that?
Yeah, gold's not liking the prospect of a higher yielding dollar, man. That's what I would say. The higher inflation, it's a global inflation too. At it, not just the U.S. but everyone else. Gold does not like that. So I think, man. I mean, I was gonna say like this is a good support level here, but clearly we're just breaking below that. EdgeFinder has a neutral reading as well, so there's no reason to go ahead and act on that as well. But I think this thing has some room to go. Right, the dollar clearly is the winner today. And we'll see. Just like anything, I think technicals will lead the way in the short term as far as like price action goes, and trying to catch like a bounce if you're trying to be that active. So what I would look for in gold if this thing turns around, I mean, I still think that it serves a purpose as a safe haven. So if you see like the dollar start to fade off a little bit, then gold will probably have a little bit of a recovery, maybe back up to these recent, not all-time highs, but like these recent ones here.
Yeah,
5400. So if you're going to be trading gold, you definitely have to consider the dollar chart as well. That's the reason why it's falling here today.
Yeah, I would agree, and I would add on to that. Probably the conflict was already priced in, and then the final nail in the coffin was the retail participants going into gold on the open, and of course, absolutely getting crushed right there. So it looks like the market already priced in the conflict, and it doesn't help that we have had massive speculation on gold, massive speculation on silver as well. If you look at Wall Street bets, gold and silver are the top trending assets. So if gold and silver start acting like Bitcoin, like meme assets, the risk of play won't really work. Would you agree with that?
Yeah, I mean, look at silver. You bring up silver; it's down 10% on the day. This is a precious metal. Like this is a precious metal, and it's trading like a Dogecoin. So
Yeah.
I mean, look at that. I mean, I wouldn't touch silver if I were trading like today. I really wouldn't touch silver. Someone said that we talk about gold selling. I wouldn't sell gold. So you are seeing this move here. I would respect gold more than I would silver. Silver, I mean, you can probably get away with selling if you have some real guts. But with gold, it's a little bit different. It's more established safe haven. It still has a safe haven role. The only reason why it's dropping is because you are seeing that dollar pop there. If you see the dollar catch a bid, then gold will probably you'll probably see that coincide with gold kind of reversing a little bit. But I wouldn't sell gold. You still have geopolitical tensions, right? That's fundamentally supportive of gold. So I would wait for, instead of selling, I would wait for a buy the dip opportunity.
Absolutely, I'm with you. I'm just waiting for the confirmation from the EdgeFinder, because right now I think it's a neutral reading.
Yes, it's a 4.
Yeah, once it prints bullish, I think that could be a pretty good play. Let's see. Gold neutral, silver neutral as well. Copper is bullish, but personally, I'm not that interested in copper. What's your take on the US stock market?
I think too. Oh wow, it's down. Well, it's not too much has changed here, but I do think that we could roll over. Again, I think that there's buy the dip opportunities for the long term. So I selfishly want this thing to roll over a little bit more.
Okay.
6,500 is the next level of strong defense. Well, right now you're at a strong level of defense, I would say, because yesterday we got to this level here and we retraced the move and we ended the day green. Today you're at the 6,700 handle. You're still within the range here, but if you were to break below this level, then I think that 6,500 is the next best level of defense. You also have that 200-day moving average kind of right there lining up as well. So selfishly, I think that a pullback in equities would be good. Now it's not too bad, right? The distance between this is only about 3%. So it may suck, it may look ugly. So that's one thing. But if you get down here a little bit more, 3%, and I think that's a good buy the dip opportunity. The only thing is how fast we get down here. If we come down here with a lot of force and we just blow past this level, then you have some real problems, because at that point you'll be below that 200-day moving average, a close below it, and then you have some real risk there. So yeah, that's kind of my thoughts on equities.
And are you looking to get in as a short-term position, or would it be more of a longer-term play, more of an investment?
For the S&P 500, it would be a swing trade. It would be a swing trade targeting to the 7,000s and beyond. Like if you see, like, this is just very hypothetical. This is a very specific scenario. Where is the drawing chart? Come on, right here. So if you were to see the S&P 500 get up until here, I'm gonna change this color to yellow. Then I would buy it here, and then as far as target goes, I would just trade this thing back up into this level of resistance. And then obviously if you get like a break and retest from that one, then it would be a continuation play to the upside. But that's a very specific scenario that I just drew out there. But I think honestly 6,500 would be a good level to take a stab at it, especially if we blow past this one initially here, and then just have like a stop right below this level. And if this thing continues to just roll over, then I would stay away for some time and just wait for a true recovery, because like I said earlier, like this thing could really start to roll over deeper.
Yeah, I do like that level, the 6,500, and it coincides with the 200 EMA. So taking a stab at it is definitely worth the risk, worth that 1%. I would like to play the Nasdaq as well, but I'm a bit afraid with the current artificial intelligence story. So S&P may be a bit safer to isolate, or to not care about the AI story. And it would be, of course, another dump lower that we mentioned, so another leg lower, which at that time I think it would be enough. Sort of that would be enough selling to cover the whole event, if that makes sense. Then we can start going higher from that point.
I agree. Well, Marco, my time here has ended here. I'll leave you to do your giveaway. I know you have that coming up here.
No worries.
So no one leave. You have a DNA funded giveaway for a prop firm challenge. So definitely go ahead and take advantage of that. Last thing I would say, guys, please go ahead and join that Telegram channel. If James, if you could help me with dropping the link, I forgot to copy it here to my clipboard. But join the Telegram channel and also get yourself a copy of the EdgeFinder. I promise you, especially in times like this, you will thank yourself later for enhancing your tool set. And institutions don't do this by hand. So if they don't, neither should you. But Marco, thank you so much, man, for the awesome conversation. I'll see you later in the week. I think we're together tomorrow as well, right?
Yeah, thank you as well. And I do think we will see each other tomorrow. Definitely join the Telegram, guys. And I'll also see Alan in the Discord as well as some of you guys to join the live streams. See you.
All right, my friend. See you. Bye.
So I'm going to post the link to the giveaway one more time. So in the comment section, you're going to find the link to the giveaway. Fill it out, and your name will get entered into a wheel of names. Then we'll pick a random winner. As far as my positions go, I had a trade on the Nikkei, which got closed. This was a 2.6% winner. Really happy with this position. I trailed the stop loss right below the 20 MA, textbook stuff. Then we had a massive red candle. That was, of course, the risk-off candle. And that one took me out. This was a signal in the A1 Discord. So the members of the A1 Discord got this trade exactly when I took it. If you want to become a member, if you want to join us, if you want to trade with me, get all of my trades, all of my signals, all of my knowledge, definitely consider clicking the link in the description of this stream and using the code Marco to get 25% off on joining the A1 Discord. So check it out, use the discount. I will see you in the Discord and you won't be sorry. I think it's absolutely the best Discord on the internet when it comes to trading, because you have real traders in there. We're not talking about 100%, 200% returns per year. We're not talking about being a millionaire in 3 months. We're talking about real trading, real trades, and real capital. Okay? So check it out. I'm out of the Nikkei. I'm not looking to re-enter. So yeah, I'm definitely not looking to re-enter at the moment. As far as euro-dollar goes, I showed you this when I had the joint segment with Alan. Price has pretty much moved too far away from my position. So we have just massively dropped lower. My sell limit is at 1.174. If we pull back all the way to the entry level, essentially if this happens, it is going to be pretty bad. That means something has fundamentally changed. But what I'm planning to do is I'm planning to use the fib. So let's use the fib. Yeah. And then I'm looking at the 382 level, possibly. So maybe I'll place a sell limit at the 382 level. I think that coincides with the 200 EMA. We can try putting that on. Let's go to indicators. Let's go to moving average exponential. 200. Okay, yeah, it would work. It would work. We definitely could bounce off of this level a little bit at least. So, of course, for all of the updates on that particular trade idea, make sure you join the A1 Discord. Gold, I do have on the watch list. We have touched my level. If you have been following me for the last couple of weeks, you would know I was waiting for the 20 MA to buy gold. But the EdgeFinder is no longer bullish. It's neutral. And gold seems to be selling off while it should be catching a bid. So something is fundamentally broken with the current price action on gold. During a risk-off scenario, during a new war that the US starts, gold usually appreciates. It doesn't sell off like this. So I'm being a bit patient. I'm waiting for the EdgeFinder to print bullish. Okay, so time for the giveaway now. I think we have enough names on the list. Let's check it out. Today is the 3rd of March. Yes, we do have quite a few submissions. Awesome, awesome, awesome to see that. So let me copy all of these submissions. Copy. By the way, I'm doing these giveaways every single day. So 1 giveaway per stream. Paste, spin. Let's see. So who will it be? Matthew? I think it's going to be Matthew. Yeah, Matthew. So Matthew V, congrats on being the winner. After my segment, I will send you an email with the link to with a discount code. Okay, so the discount code is for a 5K one-phase DNA funded challenge. If you didn't win, but you want to get funded, you want to expand your trading capital, definitely check out DNA Funded. You can also use the code, or I highly recommend you use the code A1Live, which gets you 25% off any DNA funded challenge. So A1Live, 25% off any DNA funded challenge. This is my personal account. This is a 25K two-phase account. Current equity is 26.28. I'm up 5.13%. I have 2 trades open, sell on Euro GBP, buy on the SPX, and I had a position on gold, which closed for a win. So really happy with the current progress. I'm kind of halfway through the challenge. Hopefully I can pass it. And then the main goal, of course, is to get a payout. I've had a really good experience so far with DNA. There's a big broker behind it. It is a really, really reliable prop firm. And with the code A1Live, you get a great price as well. Okay. USOIL is absolutely flying. So oil is on my watch list, but it has moved up so much that I don't think I'm going to be able to catch anything here. So it has just moved up quite a lot. Let's put it back where it was. I think it was in the general section. Yeah, this has just exploded too much. My initial game plan was to see a gap fill. Hit the 20 MA, then I possibly buy at the 20 MA, and that would be a nice trade. But because it flew higher, no sense in catching it here. I think it's just overextended. If we look at oil on the EdgeFinder, it's probably going to be bullish. Yep, getting a bullish reading on the EdgeFinder. Okay. Maybe going to 80. 80 seems like a good number. We are already stuck at the first resistance level, at the first major resistance. The next resistance level is probably going to be this one. As I mentioned, this conflict is a massive catalyst. So right now is one of the best moments to be taking new positions. Maybe not right now, but this week and the next week. I also believe this conflict is not going to last for a few days, not even a few weeks. It has the potential of becoming a new forever war. It has the potential of being the new Ukraine and Russia war conflict, which is still in progress. So that started in 2022, and it's still going on. Same thing can happen here with the US and Iran. You know, Iran can go and play the long game. They can hide in the mountains, drop rockets or send out rockets every few days. The US, unless it puts boots on the ground, it's going to be, in my opinion, and from my research, it's going to be absolutely impossible to crush the regime in Iran. If they put boots on the ground, it just further escalates the situation. So all of the moves that you're seeing right now will get escalated even further, which means stocks down, dollar up, oil up, and the general kind of risk-off approach. What happens to gold, I'm not sure. Gold is acting in a pretty weird fashion. Okay, gold should be going higher. Again, we may have been priced in, so gold may have already priced in the escalation. That's why when we opened, we had initial retail buying, and then we massively dropped. Silver dropping 10% today, massive, massive drop. Looks absolutely crazy. Sluggy says, Marco, I was looking for the same re-entry on the oil gap fill. Yeah, I think it was a pretty good entry. Of course, Trader Nick is actually in a buy position on oil from, I think, 65, and it's absolutely flying. So this is a massive, massive position for him. Yeah, so Slug and me were looking for the same thing. Bit of a correction, bit of a pullback, closing of the gap. It didn't happen. It's part of the game. My favorite thing at the moment would have to be the euro dollar. So JP225, I can put it back in my indices right there. Euro dollar, my favorite thing at the moment, because I really think this can go on for quite a long time. I think this trend can really, really reverse. You had a massive sort of appreciation in the euro dollar from the beginning of 2025, and we may have reached the top. So the top may be in. What I'm worried about is possibly this level of support, which is where we could struggle, which is the level where we could bounce off. But I also believe that we may have another leg lower. So if we drop like this, which has happened, and then we pull back a bit, hopefully I get my entry, I get the sell limit, and then we drop again. I know in Elliot waves, this is called an ABC pullback. That's what a lot of people are looking at. Personally, I'm not relying on Elliot waves, but big corrections, they tend to come in 3 waves. So you have the initial wave, you have the pause, and then the wave continues, okay? Nick says, I can't say I knew oil would do all this. I did like the improving economic data though, just following price at this point. Yeah, so no one really knew this was gonna happen, absolutely. But usually luck is where preparation means opportunity. If you keep on taking enough high probability setups, if you keep on stacking the edge in your favor, sooner or later, you're gonna find yourself at the right place in the right time. So this is one of those occasions. And yeah, congrats to Nick on this massive, massive winner. Oil looks absolutely crazy. Hopefully it just keeps on flying. I mean, we can definitely go to like this high, 80.5, maybe even higher. You know, if the US puts boots on the ground, things can get really, really crazy. So oil can go to even these highs, like 85, 86. No one knows if it's going to happen. If it happens, we're going to trade according to the new conditions. So I have 1 more minute, and then don't go anywhere because we have Tiger coming on after me. A recap of the watch list that I have. So Nikkei, close the position, plus 2.6%. If you want to get all of my positions, join the A1 Discord, use the code Marco to get 25% off. Euro dollar is the next thing I'm eyeing. There's going to be a new signal in the A1 Discord about this. I'm going to move my levels. Gold, I want to buy, but I'm waiting for a confirmation on the EdgeFinder. Okay, so confirmation on the EdgeFinder, and then I'm going to be in gold. Pound Aussie, pulling back finally, and this, I think this is a pretty good place. So Pound Aussie, if we hit that 20 MA, let's quickly check on the EdgeFinder, GBP, AUD. Neutral score at the moment, but pretty close to a bearish one. This looks nice. This looks very, very nice. I'm going to be really happy to get in on a sell on the Pound Aussie. So that's it from me. See you guys tomorrow. I have more giveaways this week, so make sure you participate. And of course, don't go anywhere because we have Tiger coming on after me. See you. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Olla Prime. Olla Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Olla Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Olla Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Olla Prime. Now back to the live stream.
What's going on, everybody? Happy Tuesday. Hope you're all doing well out there. Yeah, definitely take advantage if you are looking for a new trading account, a new challenge account. Take advantage of Trader Nick's discount there, the A1T35. There's the QR code as well. I myself have a 100K 2-step prime account with them. I think there's pro accounts, there's prime accounts. I think I have to agree with Nick in his review video he did with Olla Prime here, a month ago, 2 months ago, something like that. He was talking about how the prime looked more swing trader friendly. And I have to agree, that's part of the reason I got specifically the prime account. But yeah, it's got some pretty relaxed rules. You can hold trades over the weekend. You can news trade. It's obviously sketchy to do, especially in geopolitical craziness like we have right now. But it does give you that availability, especially if you've been around a while and you know what you're doing and you know how to manage risk. So really good prop firm. I'm happy with them. I love that they use TradeLocker. For anybody that's familiar with TradeLocker platform, that's like a new up and coming platform, and I just freaking love it. It's obviously they're based around TradingView, so they use the TradingView charts. But I still utilize the regular TradingView for all my analysis, just because it has a lot more stuff, a lot more indicators. But anyway, if you guys have any thoughts or questions on that at any point, you can always let me know at Trade Like a Tiger on all the socials, and I'll be happy to give you my 2 cents worth. But moving on to charts, moving on to setups. Not in a trade at the moment, but I've got a ton of alerts that have just hit this morning. So today I think is definitely going to be a day of action. If we take a look over here at my alerts that have hit, we got Aussie Swiss, Pound Aussie, Euro Aussie, just everything. Gold, I had an alert hit on gold, but I'm not touching it, okay, because we're still at a neutral score of a 4 on the EdgeFinder. So just wanted to see, again, guys, I like to put alerts on supply and demand zones that look great just from a technical only aspect. But remember, that's just the timing mechanism. If it's not giving me a good signal in EdgeFinder, I'm skipping it. So just in taking a look at gold while we're here, while we're taking a look at the technical side of things, I was basically kind of looking at this price area here, this kind of zone that we formed here. If you look at the RSI, the volume spread analysis candle at the bottom, it turned red. That just means, very simply, ultra high volume relative to the more recent candles. Okay, ultra high trading activity. So that's something that I liked about that area. It meets every other rule. It's pierced the 200. The 50 remains above the 200 as far as the exponential moving averages. The RSI went to an extreme oversold level, meaning it went below 20. Because you guys remember, I look for a little bit more extreme readings on RSI. I look for the 80-20. I know 70-30 is the standard, the default level on RSI, but I just personally like to see it a little bit more extended in either direction. So that's the way I look at it. But yeah, it meets everything from a technical aspect. Daily chart, 8's above the 21, showing that the trend is giving me a mechanical bullish signal there, but we just don't have the EdgeFinder. Okay, that's the only thing lacking. And to me, it's the most important piece. Just needs one more piece of dollar weakness, as far as I'm concerned, because the technicals look good. The sentiment looks good. We're just lacking on the economic scoring because we've had some decent U.S. reports come out of late. So I'm skipping gold. And as always, guys, if you have anything specific you'd like me to bump to the top of the list, do let me know. You got me for about half hour. I'll close the show out. Kind of like the closing pitcher. Come on and close it out, right? Baseball's about to start. I'm excited. So you guys will probably get annoyed with hearing baseball lingo coming out of my mouth. It's like national holiday when baseball season starts. Spring training. I'm excited about it. So anyway, skipping the gold rather. Let's go take a look at some of these other alerts. Now I'm waiting on the current 1 hour candle to close in the opposite direction in every single one of those top 5 alerts that you see right there. Dollar yen soundtrack. Yeah, we'll take a look at that. So that's really what I'm looking at. All these alerts have pierced zones. So like here's Aussie Swiss. We have pierced a 4 hour demand. Actually, no, this is a 2 hour. Sorry. This is the one that's kind of the outlier. Just looking at this 2 hour candle right here. Again, 50 is above 200. Kind of hard to see, but the 20 has been pierced. This is a 2 hour chart. If I go to a 1 hour, it's pierced easily as far as the RSI below 20. But anyway, just need a 1 hour candle close positive on this. Okay. Now I've got choices. This is what I like. I like having 5. I might as well just delete the gold there since I know that I'm not touching it. But I've got 5 choices here, guys. So obviously, hey, which currencies, if we look at the surprise index, which ones look the strongest, which ones look the weakness, that's going to really go into helping me decide which one I want to get into. Perhaps I get into 2 of these, right? I've got 2 Aussie pairs up here where it has the Aussie dollar. Okay, so I might just select just one of those because you guys have probably heard me say in the past, with the way I trade, I don't really like doubling up risk on any one individual currency and multiple pairs. That's just the way I look at it. Now, obviously, I could do half position on one, half position on the other. It just starts getting a little too crazy, especially when you have a whole lot of alerts and you got plenty of options to choose from. So, yeah, I would likely just select one of those 2, either the pound Aussie or the euro Aussie. And then same thing with euro. We got 2 euro pairs up there. So I would likely see. I got decisions to make. But the good thing is, since I'm looking for a 1 hour candle close, I got plenty of time to figure it out. Okay. Whether during the stream or just shortly right after the stream. Yeah, dollar yen though. Let's go take a look at that for you. Dollar yen, dollar yen, dollar yen, dollar yen. Okay, dollar yen, I do believe is giving us a bullish signal still. Let's take a quick peek. Yeah, it's at the top of the list. Okay. From a fundamental perspective, it's top setup. So what kind of demand zones do I have to bounce into potentially? Okay, 8 is above the 21. I like that. You guys see these orange boxes over here? That is the master pattern contraction areas. Okay, we have broken to the upside on both of these. So there's 2 here. It just basically means fair value, guys. Where's price consolidating before a big push out? Okay. The idea is on a daily chart, whenever we leave the box, okay, that's permission to buy. Look for retracements and off to the races we go. So looking good from that perspective. But as far as demand, I have an alert set here. Let me turn my drawings on and see why I put that there. So it looks to me like I put probably a 1 hour, 2 hour. Yeah, 2 hour. So see this candle right here? That's personally what I'm looking at as a potential trade. Now we've got all this, if we go to a smaller time frame yet, a bunch of bottom action. Pretty nice little support level I'm seeing right here. Turn my magnet off for a second. That's pretty decent looking support. Would you agree? So with all these people buying in this area, trying to push price up, and they finally succeeded, what did they do with their stop losses? They all put them just under here, right? They all put their stop losses, which what's a stop loss? For a buy order, it's a sell order, right? A lot of sell orders chilling right there. Just so happens that they're chilling right there, same spot as that demand zone with unfilled orders, potential unfilled orders, guys. Very short amount of time price spent there before the runoff. So if I'm a big bank trying to put in an order there, if I'm an institution, a trading, a hedge fund, That may not have been enough time to get the full order in. So if price comes back, I want to be putting the rest of my order in there because we've already seen price bounce once. Okay. Drop back in there, collect the stop losses, which are sell orders. Banks, institutions need sell orders to fuel their buy orders, right? As well as the unfilled orders from the demand zone itself for a potential buy. That's what I would be looking at, sound stack, if I were to be getting into this. So, and it may very well be a play. Question is, will it make it down there today? Well, I do know dollar yen usually has an ATR of around 120 pips or so. So it's one of the quicker moving. It's definitely the quickest moving major pair as far as the dollar-based pairs. But yeah, I do believe it's 120 pips. What's the ATR say? 126. Okay. So 126 pips. So yeah, that's your Lamborghini. That's your Porsche. Okay, so to speak. Some of these other pairs are a little slower, a little more like your Ford Pinto or Prius, right? So that's kind of the way I look at some of these pairs. But yeah, that's what I'd be looking at. 157 psychological number, guys. I mean, that's a beautiful potential entry. Again, not financial advice, but that's where I would put my money on it. Okay, so but as far as gold goes, yeah, you're asking about gold dumping. Look, we're going to be getting a lot of this kind of silliness, a lot of this. With the war going on, some minutes you hear good news. Hey, we got rid of this evil person. Some minutes you hear bad news, okay? Like the strike from one of the Israel missiles that actually struck a school full of kids. Okay, that's bad. So that's horrible stuff. We get good and bad. We get a lot of hot and cold news. So it's no surprise, guys. We're gonna probably get a lot of volatility like this. Obviously the list continues. Obviously the list continues to grow for the belligerents, okay, as far as people that are getting mowed down. Then we turn around, we have some, obviously like 6, I think we're up to 6 U.S. military personnel that have gotten killed, like 3 F-15s, I do believe, that have been destroyed. So there's a lot of bad stuff too. War is hell, war is racket, right? You guys have heard these sayings. So there's going to be a lot of this up and downness. It's hard to pinpoint exactly what caused it to drop, but again, if we were getting an EdgeFinder reading, I'd be buying this all day long because that's a hell of a discount from where price was just recently, right? Just yesterday about this time, we were all the way up here at the 5,400 area, 5,500 almost. Now we've dropped $5,000 to the 5,000 level. Look at that. You're getting a bounce. So you're getting a demand zone bounce, but you're also getting a bounce off the 5,000 cycle level. That's where that wick is. Okay. So, and I mean, these are trades I would use. I almost want to buy it anyway, but again, I personally, not to look bad on my own currency here in the U.S., but would need to see one more bad piece of U.S. dollar news, okay, to get it to change to a +5. So I'm skipping it. Technically, I love it though. I got to admit. Oil. What about oil? Hey, this one's been the crazy one. We're not looking forward here in the States or really anywhere across the world, probably, as far as going to the gas pump, filling up our cars over the next period of time, especially during the campaign, which they say is expected to last 4 to 5 weeks. So a little bit annoyed because I did actually drop down into what did I drop into? Had a 1-hour demand zone down here that I had marked out. We bounced into here, guys, and I thought real hard about pulling the trigger on a buy order there. But me personally, I was asking too much. I was asking for this gap to close first, and that's why you guys see I have an alert down a little cheaper. But there you go, guys. Demand zone caught the bid, and we're off to the races. Okay. We kind of, and also I kind of had this, this drawn up as far as this pennant that formed, and as you can see, it's got to pick a side. When it picks a side, it flies. Okay. It just so happened it picked the top side and continuing to fly up. So yeah, missed out on that opportunity, but such is life. At least I had a plan, and my plan was I wanted to see the gap close, but I was just asking a little too much. I'm sure there's people that clearly there's people that bought in this area because price bounced from that area. Okay, these unfilled orders. Demand zone, a little bit of a gap, quite the push up, and it may not seem like much, but there is a little supply zone hiding right there in plain sight. Former resistance and support, which is the blue dash line. Okay. Pairs through all that. So it showed strength from here to here. It's a pretty strong move. So simple retracement, but yeah, I was just waiting. So that was my loss. Well, not really a loss, but just didn't win anything, right? Euro pound, Elvis. Elvis is in the building, ladies and gents. Euro pound is definitely one of my alerts that just hit a little while ago. Okay, going over here, obviously, first order business. It's giving us a +6 on the EdgeFinder. So that's my boss saying, okay, Tyler, or okay, Elvis, we can now go out and look for a place to possibly time an entry. So for me, taking a look at this on a 4-hour chart. Okay, we've got, well, first of all, we start with a daily chart. Let's do this. Let's make this bigger over here. Okay, on a daily chart, starting out, we have a daily demand. Wait a minute, I got too many lines on here. What's going on? Oh, there we go. I had too many lines on my chart. So we are down here, okay, taking a look at this daily candle, this indecision candle, okay, and then we had a big leg out. So it left in its wake what? A big gap. This is our gap, guys. Our acceleration gap right here. I need to turn my magnet tool back on. I use the magnet tool all the time. I love it. Just automatically sends to points, okay, the ends of wicks, the ends of real bodies, whatever. But that right there shows me on a daily chart my inefficiency in the market. Okay, inefficiency. So within this daily demand, do I have a 4-hour demand? Do I have my confluence, my daily 4-hour confluence? I do. I've got a 4-hour at the top, which is currently where we're at. So this is one of them, Elvis, that I'm personally waiting on a 1-hour candle close to the bullish side. If we get a 1-hour candle close bullish, and again, I won't know till the end of this or till the top of this next hour. But that would show me that this more recent downtrend is at least trying to flip around to the bullish side, right? The momentum shift after bouncing in to the 4-hour and the daily. You can see it wicked into the daily as well. Okay, we just wicked in right here. There's the start of the daily. That's the proximal line of the daily demand. And up here's the distal line, or the proximal line of the 4-hour, sorry. This is the distal line of the 4-hour demand. And then down here's the distal line of the daily demand. Okay. So the whole point here is I want to see as many sets of eyes on the same price area as possible. So this tells me I have daily trader's eyes. I've also got 4-hour trader eyeballs. Okay. I want to see eyeballs. So euro pound, all I need is a 1-hour close. Might be going long here. Okay. I'll let you guys obviously know tomorrow, since I'll be off of here in about 12 minutes tomorrow how that goes. But yeah, that's what I'm looking at for euro pound, man. I think we got a pretty good confluence of demand zones down here. So hopefully that helps you with some ideas there. And as far as a take profit, if you see up here, if I go down to a 30-minute, I've actually got a nice 30-minute supply clear up here. So that's a lot of profit. That's a nice profit target, guys. Look at this. If we get a close and we start getting that bullish push away from the 1-hour candle, okay, that's a profit potential of 66 pips. Euro pound only moves about 40 pips a day. Okay, so it's one of the slower ones. It moves like molasses. Talking euro pound as far as the ATR, the average true range. So it only moves 40 pips, but that's about a day and a half worth of movement right there. Okay, so 66 pips. Ooh, that's not a good number. 66.6. So what's 66 divided by 2? Just looking for a simple 2 to 1. That's 33 pips, right? 33 pips comfortably takes me below the daily demand as far as a stop loss. So it's going to, I'm basically, and as you see, there's another demand zone down lower on a smaller time frame. I think that's a 1 hour. So I've got a 4-hour demand zone, I've got a 1-hour demand zone, and I've got a daily demand zone, and I'm putting my stop loss underneath all that for a simple 2 to 1 to the top. Okay, that's exactly what I'm looking at for the euro pound. You went long at 87.20. Oh, okay. Yeah, well, I mean, you know, let's see here. So that's not a horrible spot. I mean, look at that. That's a very nice looking demand zone. And I was looking at that same area, just so you know, Elvis. Okay, I was looking at that same area, but the only thing I was personally waiting on was a bullish close to the top side after we bounced into this zone right here. No, I got to say, I love that area. I was watching the exact same area. Problem is, when price bounced into the zone, we didn't really get a strong bullish candle close. Yeah, we got a green candle close here, but was that a bullish candle just because it was green, or was that was that more of a bearish candle? Did price close above or below the 50% line of the range of that candle? It actually closed below it. Okay. So this is a little bit more in-depth on the technical side of things, but that right about there is the 50% line, and we closed below it. So even though that's a green candle, that's a bearish candle as far as I'm concerned. And then obviously the candle after kept going, and we just kept going. So to me, that was what kept me safe. So just for future reference for you, that might be something you look at if you're looking to buy here or sell anywhere. Just keep an eye on the shapes of the candles. I mean, I personally use a 1 hour candle because a lot of times you can get noisy on the 15 and the 30 when you're trying to do this. But at least the 1 hour candle is what I would say. And then just start looking and seeing, okay, price has entered my zone. Am I getting a bullish momentum shift candle to the opposite side? Okay. This, to me, that was a clear signal to avoid that. So hopefully that makes sense, Elvis. But yeah, look, we're down here again. We got a cheaper price. We got a lot of unfilled order potential over here from all these demand zone confluences I talked about. I like this price a hell of a lot better. So basically, I'm just looking, at minimum, that's where I would be buying. But that's only if we get a bullish close. It could be the next candle. It doesn't have to necessarily be this candle, but one thing that's shaping up well so far for this potential buy is the fact that this candle that entered the zone first, look at that big ugly wick underneath. That's sellers at one point pushing price down, but then the buyers stepped in hardcore and pushed it back up to the midpoint of the range. So give me another couple wicks like that, and then a nice expanded range candle out. That's buy all day long for me. Euro dollar. Yeah, that's another one of my alerts. Or no, never mind. It was the Euro Aussie. Never mind. Euro dollar. Let's go look at that. And it is on the sell list, I do believe. Yeah, Euro dollar, pound dollar. I do think pound dollar is still a little bit my favorite. But we'll take a look at both of these real quick. Okay, so Euro dollar. So we are showing some weakness here, some strong weakness, if that makes sense. I don't know if that's a double negative or an oxymoron or what have you, but what I'm saying is it's weak because it's going down, but it's also had a strong push through this demand zone confluence. Let's go over here to a daily. Okay. See right here, guys? Tell me that wasn't a strong origin of a strong move up. Okay. A strong zone. And what happened? We just pushed right through it. Makes sense. Euro's a risk on asset, but we're in a risk off environment. Dollar being a safe haven. Right? So dollar strength, euro weakness, we continue to drop. So for me to get involved in a short sell here, I need to see some, I need to see a candle up, and I got to get a candle up to a supply zone. And I'm looking at this 4 hour one here. Now this one it could possibly even be too close. I might be more, I think this is the higher probability supply up here, just because it's up here close to a former resistance support line, blue line, you see that blue dashed line. Again, if I go to the left, okay, look at that. Former resistance becoming potential resistance again. But because we had the power to push through that demand, that leads me to believe we might have some closer strength to the downside or closer weakness. So yeah, that remains my favorite spot here on euro dollar. Taking a look, I got the alert at 116.85. So kind of incorporating the 117 psychological level, guys, might be, that's obviously the side of that supply. So that's a pretty good zone if you ask me. Now, let me tell you this. This supply zone would be out of my interest if we had bounced in to the demand zone and then immediately bounced out towards it. If this would have happened, that's no trade, because that tells me that this supply was not even strong enough to take out an opposing demand. But we had a basing there, clearly. 4, 8, 12 hours of basing. That's a long time to be basing. And then when we finally left the zone, we had enough strength to bust through the demand zones. So that to me says we got some pretty strong, unfilled order potential right here. So that's why I'm waiting for that, that's why I'm waiting for that spot right there. Oh, come on now. Trying to hit the delete button. So this would be the order for me, potential order. Right here. Okay. Same thing. If price enters the zone, give me a 1 hour close to the downside, showing momentum shifted again, because this right here is a temporary uptrend. Okay. Temporary retracement, temporary counter trend. Got to see a bearish candle again after we bounce in. So that's euro dollar. Hope that helps. As far as the pound dollar, same. I've got an alert set in a similar spot. In fact, I need to update this, guys, because we have a brand new zone formed. Okay, 4 hour chart here. Got that new indecision candle. And you guys can very easily see how I get so many dang rectangles added. I try to only leave a handful, and then if I have like this many down here, I'll delete some of them higher up just to keep my chart a little bit cleaner. But I'm a very visual person, and if I can see all my zones, then it just, I don't know, for me, it just makes things a little clearer. Yeah, that's the only zone I care about now. So I'm actually going to move my alert down here. So we had a leg in candle. We had two basing candles followed by a gap out. Boom. I like it. Now, did we bounce into any underneath into the left demand zones? Not yet, because it's further down. So see how this gives me a lot of profit potential? If I go back to the 4 hour chart, see, this gives me a nice profit potential from bouncing into supply, collecting unfilled orders from a zone I know is strong because supply was so strong it heavily exceeded demand and gapped down. So that's a strong point. So short sell there and buy to cover just ahead of the demand zone confluence underneath. How to choose €1 pair pro Anuka. And I got a couple minutes. So real simple. Look at the strength of the other currencies. So, let's just say every single euro pair was giving me a buy or sell signal, because obviously it's going to be, the quote currency in some pairs. It's going to be the base currency in some pairs. So, about the easiest way I would say is if you've got a Euro Swiss as an example, that'd be the one I'd want to trade, because the euro is the strongest currency on paper. Swiss franc's the weakest. Swiss franc just went back to 0. Okay, yesterday it was weak, but it was at 33%. At least that's halfway respectable. Today it's in the gutter, 0%. So all else being even and the same, I personally would go for Euro Swiss, just based off of the surprise index. Now that's the biggest part of it, because again, and I'll end it on this, the fundamental analysis, guys, is 14 of these boxes. 14 of the 20 boxes are heavily skewed towards fundamental analysis. So if that's the case, and that's the biggest analysis group, that's the reason to get into a trade, well, then in that case, let's match up the strongest currency with the weakest. Okay, that's the most important thing to me. Now, sometimes, maybe a zone looks a little better on a euro Kiwi, okay, or a euro pound. Maybe it looks a little bit better, a little different on the structure. But all else being equal, like I said, it'd be the strongest versus the weakest. So hopefully that helps. Guys, I think that's about it for the day. I am going to, like I said, just continue to watch. And I've got 15 minutes after I hang up with you guys to decide which one of these I want to buy or sell. So hopefully that helps, guys. With that, I will be back tomorrow. Hope you learned something. I'll be back at Trade Like a Tiger on my live streams tomorrow. So with that, have a wonderful day, and we will see you tomorrow. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.